For me, it's important. My father passed away when he was 49.
Okay.
So one of my life's ambitions is to walk my girls down the aisle.
Okay.
So I've got to do what I need to do to stay healthy and be around. Being grateful, being generous, your universe actually expands and your capacity expands when you're able to do that.
Hello and welcome to the Real Good Podcast by Neighborgood, a podcast designed for the next generation of property entrepreneurs and investors, where our guests share with us their entrepreneurial stories, their strategies, and their tactics for all things business and property related. My name is Murray Clark, and I'm your host, and today we have with us an extra special guest, a man by the name of Quintin Rossi. Quintin is one of the most thoroughbred property entrepreneurs I've ever had the good fortune of meeting. He's the CEO and co-founder of Spear REIT, South Africa's one and only Cape Town specialist listed REIT. They have in excess of billions of rands in their portfolio, and they have done incredible things during their time. Quintin is a thoroughbred property guy who takes us right through his journey across his life, from beginning to where he is now and to what's in the future. Stay tuned and enjoy some of these insightful moments that he has to share. Welcome to part 2 of the Real Good Property Podcast by Neighborgood. Quintin, it is good to have you here again.
Thanks, man.
We're going to jump into a few tactics and a few strategies that you employ in your personal life and your professional life that make you as efficient as you are. You're not just a CEO, you're also a family man. You've got 2 beautiful little girls. How do you manage the balance between running a listed property company that's doing the things that it's doing and also being a dad?
Sure. When I think I ask people that often because I sometimes do struggle. I definitely have not achieved the full work-life balance, but I do think it's, there's some easy wins that I could probably point out. One is getting up very early in the morning. So I'm up at 20 to 5 in the morning and try and stay healthy.
Is that your biological clock?
No. It's my Whoop. My Whoop buzzes me awake.
Okay.
And if my Whoop doesn't buzz me awake, the wife of my youth definitely wakes me up and tells me to go exercise to keep me healthy.
Okay.
Yeah. So for me, it's important. My father passed away when he was 49.
Okay.
So one of my life's ambitions is to walk my girls down the aisle.
Okay.
So I've got to do what I need to do to stay healthy and be around. So that's critical. I think also, just to be grateful, to really have this an attitude of gratitude for everything, because everything that we have, is, I believe that, being grateful, being generous, your universe actually expands and your capacity expands when you're able to do that. And also I've generally kind of tried to not sweat the small stuff as much as I can professionally. As a parent, I think I sweat the small stuff too much. It's I'm still a work in progress, I still see myself as a apprentice dad, apprentice husband, but just trying my best and not giving up,
So your daughter hasn't started leasing any of your properties yet at Spear?
No. So my children, it's like the generation that kind of builds the NAV. The second generation kind of spends some of it. And I got a bit worried the other day because my daughter said to me, she wants to come and utilize one of the spaces in our portfolio because she wants to set up an everything is free shop. So I think the generosity thing is getting a bit too much there. But in the fullness of time, both my daughters are incredibly smart, and my youngest daughter is very creative, and her mind runs. So I can imagine there's some value to be added there into the future.
In a typical day, what does it look like for you? And what are some of the things that you could advise entrepreneurs and just people who are listening in terms of achieving at the levels that you do achieve?
So I personally decided that I want to take my kids to school until the day they finish school. So for me, that's like a non-negotiable as much as I can. Sometimes I travel, which is not that often.
Yeah.
So a typical day is I get up. We own a lot of assets in Pardon Island.
Okay.
So I live up on the West Coast. So every now and then I will pop in at one or two of our properties, have a coffee with one or two of our tenants, and just catch up, and just try and stay, keep a finger on the pulse of the market. Because you know what happens typically when a business becomes a little bit corporatized, you kind of create this kind of separation between what happens on the streets and what happens in the office. So typically I like to be in the portfolio. I like to be in the business. So that, and then when I get into the office, also just touching base with literally asset management, development management, operations, finance, investments. And I think that's, the beauty of our business is that we've kind of developed a team, where they can actually function without me. They actually don't need me. And that's also quite a benefit. So that, and then I try and leave the office probably around 4 because I do have a longer commute. But I'll typically pick up a meeting on my way down the West Coast because we have a lot of assets down that way. And then get home and it's, try and it's a fallacy to think that your phone is ever off. You just find different ways to respond. So I've had to learn a little bit to kind of disconnect from that.
Okay.
Because I do feel that kind of does rob a little bit of my family time.
Yeah.
But it's a constant, because building, as you know, is hard. And building something doesn't keep office hours.
Yeah.
And sometimes you have to, like explain, guys, I actually have to deal with this, but don't make that the norm.
Yeah, for sure. So you were speaking about team, and you have built a team around you that's really, really solid. How do you go about doing that as an entrepreneur? What was your process within a property context, but just generally in the entrepreneurship space? How important is it, and how do you go about building it?
Yeah, I think Jim Collins wrote a book, Good to Great.
Yes.
And he said, the bus is moving forward, right? And it's less important, always at what speed or necessarily in what direction the bus is going, as long as the bus is going in a direction. But what's the most important is who's actually in the seats on the bus. And that's always been my approach to, kind of building the team that now operates our business successfully. People that I've had long relationships with. And that was, coming back to even in the first episode about building those longer term relationships and people that I'd worked with, people that I'd gotten to know, that we then handpicked for specific purposes within our business. And the beauty is that those people have literally, where they started in our business and where they are now, they've just it's just been an upward trajectory. And that's been very gratifying for us. And also we kind of hold our staff and our team with an open hand. So we encourage them to kind of grow, to learn, et cetera, et cetera. And there's a very strong kind of upward mobility culture within our business.
Got you. In terms of value creation, you're obviously sometimes I think brokers are the best at creating value because you're so close to people who start in the broking space. You're so close to the property space. You guys have a big industrial portfolio. What is the split between industrial, retail, commercial, as a first question? And then looking at new deals and thinking about value creation, how do you think about that when you're looking at a deal?
Yeah, so on a gross lettable area basis, our industrial portfolio is just on 60%.
Okay.
And commercial just around 29-30%, and the balance is retail with a bit of mixed use. And the retail is kind of split between convenience retail and destination retail. And yeah, so that part of that's also by design. The Western Cape, fortunately or Cape Town, got a mountain on the one side and an ocean on the other. So there's this kind of supply and demand that kind of manifests itself, particularly in industrial because of the shortage of zone industrial land. And also just, there's been a lot of consolidation that's happened within the industrial space with the rise of online and so on and so forth. And that's created a lot of kind of value unlock opportunities, for us. But I think for us, we we like to, when we look at how we can unlock value, we like to really kind of do a deep dive on what the property can actually offer us. I'll give you an anecdotal example. Some of the proceeds from the disposal of our interest in Oasis, we went and bought a heavily under-rented distribution center in Paro, which Distel was the tenant. And eventually Distel, after almost 9 years, moved out, but we managed to get the rental, massive increase in the rental when we acquired it, purely because they had no other options.
Okay.
So eventually Distel built their own facility in Green Park, which came off the back of a fire they had in a manufacturing facility on Green Park in Epping. And we were now wondering, like, what are we going to do with this property? It's 15,000 square meter distribution center, 38,000 square meter earth. And we had a couple of ideas, but then COVID, it's like everything just kind of grinds to a halt. And one of our office tenants, which was a shipping and container business, had kind of said, hey, listen, we've got this we need a container terminal. And if you look at kind of town planning and zoning, not all properties can accommodate containers. So, just call it, I don't know what, good fortune. Yeah. I asked, our development guy to get me the zoning certificate, and I was going through the consent use, and I saw, geez, we got consent use for a container terminal. Anyways, long story short, we ended up redeveloping that entire property, securing Grindrod on a 10-year lease, and it's now a fully fledged container terminal.
No way.
Through a consent use approach.
Okay.
And that's also an area where, when you are highly invested in your business, you really become like a honey badger. You scratch around everywhere for value.
For value.
And what we did was effectively kind of completely reposition the asset. And right now it's just, fully occupied. They kind of just operating at full tilt. So we look at that. Also, as from an investment perspective, we take a value investment approach to everything we acquire. We believe that you actually create the value not when you sell the property one day, it's actually when you buy it, because you got to buy it well, and you got to make sure that you don't pay for future stuff that's not there yet, because there's actually a cost to creating that, and there's a opportunity cost to pay for it now.
Yeah.
So that's also how we approached, Sable Square. We've got probably about 25,000 square meters of available bulk for resi, which we're going to be unlocking over the next 2 to 3 years. Pardon Island, we've done in Blackheath, we've just done a 16,000 square meter redevelopment for a company that actually closed down one of their facilities in KZN because of the floods and the riots, and consolidated in Cape Town.
No way.
Which has got a beautiful impact on reducing our unemployment rate, improving the GDP for the province, and also improving the Spear portfolio. So we really kind of scratch around and look for opportunities. Also, because we're a fully internally managed REIT, we don't outsource the responsibility of management, asset management, any of that to a third party. There's a time and a place for property management when you don't have the scale yet. But that's really, how we look at it.
Do you guys manage your own property management, or is that an outsourced function?
No.
Okay, amazing.
We don't outsource anything except the kind of typical professional services to development, QS, structure, etc. But other than that, leasing, everything is done internally.
COVID and the future of offices. It's a question that everyone asks, and I need to ask it because you're someone who's an authority in the space. What's your thinking?
So I think I was talking to the group CEO of one of the largest REITs yesterday, and we were discussing, the impact of offices and the future of offices. And I fundamentally believe that there's a space and a place for offices regardless of COVID. And my kind of qualification depends on where the offices are. So I think you look in Cape Town at the moment, we've seen a huge resurgence in demand for office space, particularly the AAA and P grade space. As it stands today, on the 10th of November, you cannot find 2,000 square meters of P or A grade offices anywhere in Cape Town. So there's been that kind of a resurgence, but it's very specific to locations. In April last year, I was in the US, and you look at Manhattan as an example. There's been a massive flight to quality, from Midtown Manhattan to, say, the Hudson Yards. And there you've got, all the big names. So it comes down to, amenities. It comes down to location. It comes down to access to public transport, all those, and how efficient the floor plate is. So in a sense, you've got locations like in Johannesburg where you've got massive vacancy challenges, which, are also a consequence of poor municipal management, poor infrastructure investment, et cetera, et cetera.
This move to Cape Town is amazing for the city, and I think as Cape Townians, like we embrace it because we're the benefactors of it. But I'm still in the back of my head thinking that if Durbs and Josie and the rest of the country remains under pressure, that it has negative consequences for Cape Town. Because yes, in the short term we get migration, but at a country level, it's not great to see what's happening from a municipal regs perspective and management in Josie, just generally. What are your thoughts on that, and just impact on Cape Town generally? Because we, as I said, we are the benefactors, but there's still the negative side of seeing your big brother up the road sort of struggling as much as it is.
Yeah, so I think the example I can use is that I love rugby, and if Western Province or the Stormers are good in a season, and the Bulls are good in a season, and the Sharks are okay, I know you're from Durban, then generally speaking, the Springboks are super.
Yes.
You know what I mean? So we actually need our provinces to be strong.
Yeah.
But I think that people should not waste their vote next year. I think that's really the important thing, is that a change has to come from at the ballot boxes. So, and we need to see we need Johannesburg as a city to actually go into a 10-year golden age.
Yeah.
Is really what the South African landscape needs. KZN, I think you can already start to see that there's a bit of a shift happening in terms of privatization of certain of the SOE services, et cetera, et cetera. But I do think it comes down to a potential change at government level to actually be the catalyst for that type of change to happen. As an example, at municipal level, you can make the fastest impact to your people on the ground.
Yes.
And that's really what the city of Cape Town got it perfectly right, and what they've set the kind of trajectory was that they've committed to great service delivery at municipal level. What happens at provincial and at government level is really very much a macro kind of perspective. And the complete opposite has happened in Johannesburg, where you've seen not enough money spent on infrastructure over a medium-term budget, versus Cape Town over the next 3 years is spending 43 billion on infrastructure. City of Johannesburg over the same period, with 1 million more people as it stands today, is spending half of that in an environment where the infrastructure is decayed. So that really is why, it means why it's so important from an investor perspective to invest into locations where the geographical real estate fundamentals are strong. And I do hope and pray that things will improve in Johannesburg. And if you look at things like property valuations, the impact of vacancies, unfortunately, landlords are still having to pay the rates and taxes. So, they are a bit between a rock and a hard place.
Yeah. It is a risk, man. I think people investing in Cape Town absolutely makes sense. Residential and hospitality, you've had 2 hotels, from what I can understand. And resi, you haven't done too much resi outside of, from what I can understand as well.
We've done 2 residential developments, highly successful. But I think the timing in real estate is as important as location. So we developed a apartment block in Greenpoint, Main Road, called the Warwick. We acquired a heritage building called the Mansions on Main Road, and then we acquired 3 houses which we consolidated and did a high-rise development there. But we hit the sweet spot of the market in the early, I would say, 2014, 2015, 2016, going 2016, we were sold out within a few weeks of launching. And then for the next kind of 3 and a bit years of the build, it was risk free, So I would say that is not necessarily the normal kind of. So please, people, don't take any risk on resi development. It's not a walk in the park.
Yes.
Development is high risk.
Yeah.
Therefore, your returns have to be substantially higher than when you're investing into income producing assets.
Yes.
And then we also developed the property with a consortium called Bantry Hills, which is a very high end residential development on Tramway Road in Sea Point. And it's an interesting story because that was actually a land claim that was awarded, and then we acquired it many years after the award from the benefactors. And there was a whole story behind that. We were the recipients of an amendment to the town planning envelope, so we got additional bulk. But residential development is it's not for the faint-hearted. You can be hit with higher interest rates. You can be hit with a stop order. You can find archaeological bones or artifacts on your site, and then you kind of have to stop. So for us as a business, within our listed business, we don't take development risk.
Okay.
Purely because we are stewards of shareholder capital. Yeah. So that's the resi component, but we will introduce a rental segment over time within Spear, given the fact that we do have a lot of residential opportunity at Sable Square and in Pardon Island.
Got you. And that will be income related.
Correct.
Okay, got you. In the hospitality space, I know that you guys recently sold, I think such a big word for me with Spear and yourself has been focus, and how important focus is to not just geographic focus, but just focus generally in region and how you guys operate. And that seems to be reoccurring all the time, is bringing focus to your strategy so that those levels of efficiency at an operating level just continue to outperform your peers. Was selling your hospitality asset another part of bringing more focus to your business?
Yeah. So I think from a REIT investor, the reason why an investor would invest into a REIT is to receive income every 6 months without taking direct property risk. So when it comes to hospitality, generally speaking, a lease agreement with an industrial tenant is fixed income, escalating every year for a certain period of time. When it comes to hospitality, it's really more like operating a business. The real estate becomes a cog in the wheel of operating that business. You've got inventory, you've got staff, you've got FF&E, you've got all these factors that actually start to chew away at your bottom line.
Yep.
And also your kind of revenue generation or net profit generation becomes quite lumpy because 1 year you'll shoot the lights out, another year you've got a visa crisis, and then another year you back up, another year you've got a water crisis, and then another year you back up, and then you've got COVID. So in terms, one of the kind of hallmarks of our business is predictable, consistent, and credible. And for us, we decided to narrow again our focus. So geographically, we focused, and we were exposed to industrial, commercial, retail, and hospitality. Because in the Western Cape, you actually want some hospitality exposure, but given just the impact of tourism the kind of room rate growth that you'd find. But when we did a review of that allocation, we found that, especially during COVID, you were having to, your overheads were your overheads, whether you had a bum in a bed or not, and versus contractual income. So that was one of the reasons why we decided to exit hospitality, but in a responsible manner. We advised our shareholders during COVID. We excluded all hospitality income, which there wasn't, from any of our forecasts. The DoubleTree was the first asset that we sold, and then 15 on Orange. But 15 on Orange we actually sold after we restored income to the asset, and we actually exited that asset at probably one of the sharpest hospitality yields in sub-Saharan Africa. So in hindsight, everything in property is also cyclical, and I don't have any regrets. I am always thrilled to hear how well hospitalities and how strong hospitalities come back for the market. But to be able to run a business where you can forecast and predict as much as you can within the constraints of your trading environment, hospitality just didn't give us that kind of consistency that we'd get from the other asset types.
So in review of your total listing period, you guys, it's now 2023. So you listed in which year?
2016.
2016. What would you have done differently?
I think there's I try not to live life with any regrets. But we did a capital raise 1 year where we were about 2.2 times oversubscribed. And in hindsight, I should have taken all the money and utilized that for growth, because there's a lot of learnings that happen in the valley, and there's a lot of learnings that happen on top of a mountain. And when you're on top of the mountain, you think everything can only move up.
Yeah.
You think you don't necessarily learn as much than what you do in the valley, because that's really where you find you go and you kind of deal with all the demons, and fast forward to COVID, you had this huge drop in share prices, balance sheets were under pressure. Fortunately for us, we never had any of that pressure on us, but shareholders wanted to see that you were highly liquid, and I would say, but I wouldn't even call it a regret. I would just say that in hindsight, when the ducks are quacking, when guys are offering you money at the right price and your cost of equity isn't very high, and it's a good placement price, you should take it and just keep it for a rainy day.
Completely.
But other than that, I would say, I believe everything happens for a reason.
Yep.
And, we've been extremely blessed to be able to operate as a smaller REIT. We've been operating in an environment where we've outperformed, just as an example, the first 6 months of this year, from 1st of March to the end of August. Spear as a company has outperformed the SA REIT index by 10% on a total return basis. Wow. Which, it's for us, it's complementary, not just to the management team, but to our entire business. When the guys that are based on site, they watch the costs, they watch everything that they possibly can to mitigate against cost creep, interest costs, et cetera, et cetera. So right now, hindsight, I probably wouldn't change much.
Just collected more cash.
Correct. Exactly.
But next time you collect money, you'll know not to do it. Last question for part 2 of this episode. We think about bringing good to neighborhoods as a company. Neighborgood, our mission is to do that. And we like sharing good news, identifying companies, people, social organizations that are doing good things. Is there anyone in your world that's doing something good in any form that you'd be open to sharing with us?
Yeah, sure. We, as I said, one of our values is generosity as a business, and we involved with quite a few individuals and groups that actually do incredible work. One in particular that really stands out for me that we support on an ongoing basis is a farm out in Hopefield. And the reason why it stands out is that, if I look at my own background, I'm probably the most unlikely person to have become a CEO of a listed property fund, to be honest. Okay, I grew up in a small town. I was a waiter. I kind of studied law, et cetera, et cetera. And, this place called Hope Farm in Hopefield, it's actually a place for where young men go with substance abuse problems that, want to turn their lives around. And there's a lady called Izette Carroll, and she just has this incredible way of helping these young men really just break free from the chains of addiction. She teaches them manual skill, labor skills, teaches them how to garden. They've got the most incredible spec boom growing program. They've built a church on site. They've got a very faith-based values approach. So yeah, Hope Farm in Hopefield.
Awesome.
And one of the gentlemen that was involved with our Bantry Hills development, he's also quite famously known for the founder of Fabiani Clothing, Jeff Fabian.
Yes.
He once told me that where there's hope, there's life. And whenever I go and and chat to the people at Hope Farm, which has only happened once in this last year, I always remember that where there's hope, there's life.
Yeah, that's an amazing.
So yeah, they're doing an amazing job. You can check them out on Facebook, Hope Farm, on the West Coast.
Awesome.
Yeah, so definitely, I think they are making an incredible impact.
Quintin, it's been awesome to have you. Thank you for joining us today, and keep up the amazingly good work that you are doing with Spear, and we look forward to seeing what the future holds.
Awesome. Thanks for having me. I appreciate it.
Cool.